Hello guys, welcome to the Black Ledger FX channel, where we take trading to the next level. Now in today's video, we're going to learn about breaker blocks. I know you've heard this on a lot of YouTube channels, but today I'm going to explain it. I'm going to give you guys deep explanations to help improve your trading strategies. Okay, so we have the bullish breaker blocks and the bearish breaker blocks. We're going to start with the bullish breaker blocks. So with the bullish breaker blocks, it's very easy to identify. Okay, now how can you identify this? First, there has to be an impulse move up, retracement, a move up, and then a break of structure to the low side. I mean a liquidity grab or liquidity hunt to the low side, and then an impulse move upwards causing a break of structure. So this is how it looks like. So we will have an impulse move up here causing a break of structure, and then a liquidity grab below here. So after the first impulse move up, down, up, and then a liquidity grab below this lower low, we should anticipate an impulse move upwards causing a break of structure. Then we wait patiently for price to retrace back to our breaker block. Now this will be our breaker block. This will be our breaker blocks. So with this, you can add this to your trading strategy. You put your entry here, your stop loss will be below the block, and then you target the next high for 1:2 RR or 1:3, anyone you prefer. So this is how the bullish breaker blocks work. It's very easy yet effective, very effective. And when you apply this in your trading strategy, I assure you it will help improve and also help you win more trades. So this is what the breaker blocks looks like, and I'll be showing you a lot of examples in the chat very soon. Now let's move to the bearish breaker blocks. Now with the bearish breaker blocks, we should have a move downwards, a move upwards, then a move downwards, and then a move that will grab the liquidity here. You should have a move that will grab liquidity here, and when that happens, we should anticipate an impulse move downwards causing a break of market structure. Yes, now this usually confuses a lot of traders because they anticipate a move like this from here to here as a break of structure. No, in my next video, I'll be teaching you guys the difference between a liquidity grab and a break of structure. So after the liquidity grab, we should anticipate a break of structure to the low side. Then we mark out our breaker blocks. We wait for price to return or retrace back to our breaker blocks. Then we set our entry, our stop level, and our take profit. Very easy but effective. So I'll be showing you a lot of examples on the charts, and then we move on. Okay, so let's go to the charts. Okay, so looking at the charts right now, I can see a lot of examples, but if you're new to this, you won't be able to see them unless you do this consistently. You'll be able to see them without even marking them on the charts, but I'll mark them on the charts for you guys. Okay, so this is our first breaker block. This is our first breaker block. Based on the example I gave, this is our first breaker block. We're going to examine that deeply, this is our second breaker block. There you go. Okay, this is our third breaker block. Sometimes it might not appear very clean. Okay, so with trading you have to be very smart, okay, because you are trading against smart people, and anytime you lose money, somebody makes money. Anytime you make money, somebody loses money. So you have to be extremely smart to have an edge in this financial market. So I think these examples, okay, there's one here as well. Very good. Okay, so these are the examples I wanted to show you guys in the chat about concerning the breaker blocks. So with the breaker blocks do not provide the cleanest rejections during non-farm payrolls, FOMCs, and CPIs. I'm going to repeat myself for those who want to write it down. Breaker blocks do not provide the cleanest rejections during non-farm payrolls, FOMC, and CPI. So with that being said, let's move forward. So as I said, for a bullish breaker block to occur, we have to have an impulse move up, which happened here, a move down, causing or taking liquidity, and then an impulse move up, causing a break of structure, okay, which happened here. Then we came back to retest our breaker block, then we enter our trade. So everything I said, the example I gave played out here correctly. All you have to do is to open your eyes and observe the market. The candlesticks always tell you what to do, when to enter, when to exit. The candlesticks tell us exactly what to do. Okay, so I'll do away with this and then we examine. All right, so this was our first move up. So our move up, okay, then we came down here, taking liquidity, okay, came down here taking liquidity from this low. It took liquidity, then after taking liquidity we had a move up. After taking liquidity we had an impulse move up here, causing a break of structure here, as you can see, causing a break of structure. Good, that is exactly what you want to see for an effective bullish breaker block. That is exactly what you want to see. Okay, so for me, when I see something like this, I see it as what turtle soup. It's what easy money, the easiest way to print money. So what I usually do is I mark my breaker block because everything has played out perfectly. I put an entry here. I put my stop below the breaker blocks. I put my stop below, and then I target the next maybe other block or inefficiencies, or probably liquidity, because as you can see there's a lot of liquidity up here. So target the next liquidity for 1:4 RR, and then you are done for the day. So breaker blocks are very effective. I don't know why most people don't talk about it, but I use this daily to win a lot of trades. Now let's talk about the bearish breaker block here. This is the perfect example. as I said, as I keep saying, consistency with your strategy and consistency with trading will lead to profit. If you are not consistent with your strategy and trading, you cannot capitalize on this big move. Now look at this pips. Look at the move down here. Big move. This strategy, okay, the breaker blocks, as soon as you see it, you should anticipate what? A gigantic move either to the upside or the downside. Anytime I see a breaker block, I anticipate that if it's a bullish breaker block, the market is about to move up approximately 100 to 200 pips. You can see it on the charts, and I'm not telling lies, guys. It works like magic. So looking at the bearish breaker block, now what I said has played out. Okay, we had a move downwards, then a move upwards, grabbing liquidity, then an impulse move downwards. Good. So when this happens, we should wait for what? A retest to our breaker blocks, then we sell and target either an inefficiency or an order block, then we get our money. So this is very easy. Now you should, sometimes I use the lines to mark out my breaker blocks, sometimes, not always, okay, because this breaker blocks, they are sometimes very fast, okay. They can reject off the wick. They don't usually touch the body of the candles. They usually reject off the wicks, okay. They are very fast. So I usually use the body and the wicks, and then I mark it out. I wait patiently for it to get there. I put my stop below the breaker blocks, and then I target any inefficiency or breaker block down here. So an example will be this. Put my stop here, then I target here or this other block, and it's going to hit perfectly, guys. So this is what I wanted to teach you guys, okay, breaker blocks. My next video will be about liquidity grab and market structure shifts. Kindly like and subscribe, and as the saying goes, chart your course and navigate the markets. See you guys in my next video. The videos on my channel are completely free. No paid mentorship, no private mentorship, no signals. I'm teaching you guys what I know for free. All you have to do is subscribe, share with friends, and let's milk the market together. See you guys in my next video.